Now, the inverted head and shoulders pattern is quite literally the exact opposite of the head and shoulders pattern. You're going to have a stock that starts to sell off. It will then find a point of support and give you a little bit of a bounce, to which it begins to sell off again. Now, the second sell off is going to be larger and lower than the initial sell off. Then that stock will find support, it will bounce again, it will sell off once more, this time creating a higher low before rallying once more. And what you're left with is a left shoulder, a right shoulder, and a head. This series of peaks and valleys are what makes up the head and shoulders pattern, and it is actually a bullish reversal pattern where the stock must initially be selling before it eventually reverses and moves back up to the top side. The key to trading this strategy is being able to identify where the left shoulder and the right shoulder support is. Once you identify that, the way to trade this strategy is to wait for a pullback retest of the right shoulder support where you would take your entry for the move higher. Now, when you take your entry over on the left shoulder, your stop loss is going to be placed just below that support point. This gives you a low amount of risk to the bottom side with the potential for a high amount of reward to the top side. The second way to trade this strategy would be to wait for a break of the neckline of the resistance overhead following the bounce off of the right shoulder. So that way you're not entering on the pullback down here, but rather entering on the rally up here. You take your entry on the break of this resistance point for the move higher. Whether you take your entry at area 1 or area 2, it doesn't really matter. It kind of comes down to personal preference. Area 1, you're going to have a bit more risk because there's no guarantee that it's going to bounce at the right shoulder, but you will have more profit margin as this moves up to the top side. Taking your entry at area 2, you will have more confirmation because the stock has already rallied, pulled back, bounced, and rallied again, but you're taking on a less amount of profit margin because you've missed out on a lot of the move up to break the neckline. Now, the head and shoulders pattern, it's not a very common pattern that's out there, so you're not going to find it a lot, but it is on this chart. I'll give you 5 seconds. Let's see if you can find it without me telling you. 5, 4, 3, 2, 1. If you couldn't find it, I will identify it for you. Right here in the middle of this chart and the middle of this price action is a head and shoulders pattern where you have a stock that's selling off, then finds a bounce. That's going to be your left shoulder. Sells off further, finds a bounce. That's going to be your head. Sells off, finds a bounce. That's going to be your right shoulder. So left shoulder here, right shoulder here, your head is here. Then you have the trend reversal for the move back up to the top side. Now, like I said, there are multiple ways to trade this. So let's say you find the support at the left shoulder here. You're going to look for the support of the right shoulder there. Your entry is going to be on one of these 2 candles here as it pulls back to test the right shoulder support as a point of support before moving higher. The other way to enter this trade would be to wait for a break of the neckline. So your entry would probably be on one of these 2 candles here for this move higher. And like I said previously, it doesn't really matter if you're entering on this candle or if you're entering on this candle. It just comes down to personal preference. By taking the entry lower, you're taking on a bit more risk because there's no confirmation that it will hold that line as a point of support. But you get more profit margin and pay it off if you're correct because you're in the trade earlier. Now, if you take your trade on the break of the neckline, you're obviously on the right side of the trade at this point because the stock has created higher highs as well as higher lows. So it's a little less risky to take the entry on the second move up after the break of the neckline, but you're taking on less profits because you're in the trade a bit later. In terms of pattern significance, I would not give too much weight to the inverted head and shoulders pattern. Like I said, it's a fairly rare pattern that's out there, but the more you know, the better prepared you will be. Just remember that for the head and shoulders pattern to be valid, the stock must previously be selling off, as this is a bullish reversal pattern. Then you're going to look for 2 lows. One low that forms the left shoulder, and then a lower low that forms the head, and then a higher low following that to form the right shoulder, and then the pattern should confirm from there. That's it. That's all that I have for you on the head and shoulders pattern. Hope the videos helped you out, and I will see you in the next one. Cheers.